This Twin Peaks Investing podcast is brought to you in association with SharePad from ShareScope, the UK's #1 investment data and analysis software for private investors and traders. Visit sharescope.co.uk and discover the advantage.
Hello and welcome to this Twin Peaks Investing podcast. It's podcast 106 and the date is the 26th of July 2023, and I'm here with my good colleagues and co-host Henry Viola here at HT Viola on Twitter and Alex de Groot at De Groot Media on Twitter. Alex, Henry, how are you both?
Very well, thank you. Very well, Pete. How are you doing?
Good. I'm not too bad. I've had my ups and downs, but I had a fantastic week away with the bosses, all in nature, on the beaches, isolated beaches, in nice gardens, chilling out. Zen-like week we had. So happy days. Then I've come back to this, and the markets can't make up what it's doing. So here we are. I'm going to bring you up to speed with the markets first, guys, and then we're going to get into some nuances about the markets and some other things. We're going to talk about some stocks that Henry's been looking at. We're going to talk about some stocks that Alex has been looking at. We're going to talk about two stocks that I've looked at this week and a few other bits and pieces, and see how we get on. Okay. I think it was the last podcast we had or the one before last. We were talking about the markets and we were quite worried that they dipped below to heading towards the 7,250 mark. And we were hoping at that stage we were at 7,400 and odd, that we would start to go up a little bit more and edge toward. And I said that the resistance factor or the resistance level was around 7,670 or 7,050 odd. And actually, today, we nudged that. Today, we hit 7,000, sorry, let me get this right, 7,702 as an intraday high before we gave that up. And the low today was 7,630, and we closed at 7,676. So we're still at the upper reaches of where we've been in the last couple of months. So that's a positive. But we've got to be concerning ourselves as to whether or not we're going to see any signs, because we've got absolutely loads of US stocks that are reporting. And if they report good numbers, we'll go higher. If they report poor numbers, we might give up the little bit that we've got, because we haven't got any behemoths to carry the markets. So 7,676 is where the FTSE closed today, down 14 points or 0.19%. FTSE All Share still below 800 at 766 plus today, plus 0.15%, which is, 0.5 of a point, 1/5 of a point, 0.0%. So that's where we are. We're still doing okay with the larger caps. Smaller caps are still struggling. FTSE All Share still hanging above the 4,000, the magic 4,000 at 4,188, down 5 points today. So it's still doing okay. We need to watch that magic number of 4,000 on the FTSE All Share, because then that's when we know we're in trouble. Guys, what have you been seeing regarding the markets? What do you think was going on? We've got to get some more data out of the Fed as to what they're going to do. Everyone's expecting one more increase, and maybe that's it. We maybe not get an increase in September. And then they're hoping that the inflation data over there continues to dip. So we may not get any further increases. But if they don't increase and our inflation doesn't come down as fast as they do, are we going to carry on increasing? Then we've got that complete disconnect as to what's going on in the UK versus what's going on in the US. Any thoughts?
Yeah, I mean, I'll kick off, guys, if that helps. So, I mean, two things for me. One, I just wanted to flag on the call this morning's massive profit upgrade from Rolls-Royce, which you may well have seen. Stock price, I believe, was up 21% at the close of play today at about 185. This is a very big company, as we all know, 15 billion plus market cap. So it's no tiddler, but it's building a following again. And the scale of the upgrade today is really worth digging into. I think they're upgrading market expectations to north of $1 billion in terms of profit.
Wow.
And I think, as we all know, Rolls-Royce is a big play on aerospace and defence. So this speaks to some post-COVID normalisation from their supply chain, from their clients in terms of what they're spending. And we know that defence globally is a big growth area with what's going on, geopolitically. So is it one of those names where the market is behind the curve in terms of upgrades? If it is, this is a name that could well worth still be chasing on the upside. The other thing is, I think the CEO, who has a Turkish surname, Tufan, is building a following. So Roller would be my stock or corporate news of today. And then on the macro, on the big picture, Pete, which you're mentioning there, yeah, it feels as though the UK is a bit of a laggard in terms of the inflation prints. But my feeling is that people, you don't necessarily want to be underweight the UK. I mean, sometimes I'm a little bit bearish on the UK, but it does feel to me as though we're not far away from a little bit more good news. And then some of those comments that we've had in recent months about the UK being a cheap index may bear fruit. That may be the reality. It does feel as though the UK has been a real laggard as a market year to date. If we start getting a couple of decent prints on the inflation front, I think you could see some inflows into UK equities for the first time in a long time. And as retail investors, you want to ride on the coattails of the big boys, of the big institutions. And they've been underweight the UK for 3 years. So I just wonder if we're maybe, nearing a bottom in terms of sentiment towards the UK. So let's see. But Rollers on the corporate side for me, big news today. And secondly, are we getting close to some good news on the inflation front in the UK?
Well, I hope so. I'm just going to interject before Henry adds his weight to this. The chap you spoke about at Rolls-Royce as the CEO is Tufan Ergin Bilgic. And you guys know I can't pronounce anything. So that's that's all you're going to get at the moment. And the CEO said, our multi-year transformation program has started well, with progress already evident in our strong initial results and increased full year guidance for 2023. So better profit and cash generation reflects greater productivity, efficiency, which is always important, and improved commercial outcomes. So they're getting some large contracts, they're being more efficient, they're reducing debt, and the numbers are increasing regarding the guidance that's been raised. And I think you're right. I think that lots of people have gone, it's heavy, it's dodgy, they're constantly having problems. Share price goes up, it comes down, they raise money at very dilutive numbers, and then they bounce back and then they go back again. Defence, everyone's throwing money at defence. And the likelihood is that we're going to be spending more on defence going forward. Not only us, but obviously the Americans are spending a fortune, and China, and everybody else. So yeah, I think we are behind the curve regarding it. It's one of those companies I've always been a bit cautious of, and I've been wrong historically on. So yeah, good call that one, Alex. I like your shout on that one. Any thoughts on Rolls-Royce, Henry?
Not Rolls-Royce.
Apart from that, you would like one, but they don't make the Rolls-Royce anymore.
If a listener would like to donate one to me, I will gratefully receive it. No, I missed that news about Rolls-Royce, actually, so thank you for flagging. But I've got a similar story in a different sector, in the construction sector, with Kier, who recently announced that they have significantly upgraded their cash generation forecasts. They've got a very well-secured pipeline for 2024. And as a result of improved efficiencies, are now throwing off an awful lot more cash and are paying down their debt an awful lot faster than they thought they were going to be. Now, that was a really interesting little update for me, because I use the construction industry as a bit of a barometer of the wider economy. So it tends to be the first sector into a recession and the first one out of it. And the house builders have all been reporting recently and saying that they are starting to see headwinds in sales and are, as a result, are slowing down the production of new properties. And I think that's my impression, was that that was starting to have an impact on the wider construction sector. No one's redeveloping corporate buildings. No one wants offices. house building's slowing down, so the construction sector is maybe not looking that healthy. But the interesting thing about Kier is that a big chunk of their money comes from the infrastructure space. They specialise in doing big road networks and utility platforms for the government. And that seems to be going absolutely gangbusters at the minute. We seem to be pouring an awful lot of money in there. And so firms like Kier may be ones to watch. You know, a couple of years ago, these were very slim margin businesses, not all that profitable. And I'm not necessarily saying Kier breaks that mold, but it's certainly, when I went and had a look at it on the back of this update, looks like a very different business to 3 years ago. And in a very positive way, it seems to be going in a good direction. So I'm hoping that bears good news between Rolls-Royce taking off and Kier doing better than expected. I'm hoping that's a good indicator for a more healthy economy than some of the papers are making out.
I hope you're right, Henry, because I think it got tarred with the brush of Carillion, and then it was going to go the same way. And
Yep.
all of those that are infrastructure led and having big contracts and PFI and this, that, and the other, and blah, blah, blah. Margins were thin, they were carrying too much debt, and everyone was going, stay away from those because that one's going to be next, sort of thing. And I've just pulled up some notes here, and it's saying that it said its year-end order book remained robust, surpassing 10 billion, indicating strong demand in its core markets. That's a lot of contracts to be dealing with, and scattered all over the place. So if they can use the word again, efficient, strategic, and actually conduct their contracts without overruns, that's the important bit, isn't it? You know all about that, Henry.
Yep.
If they can maintain that, and even some of the cost comes down, because you remember last year we were talking about, was it timber and lumber being stupid prices, and
I think the timber
up?
price quadrupled. I mean, structural steel, you just couldn't get it for projects.
Absolutely.
Nightmare.
Absolutely. So if they got any of those contracts last year and the costs have come down, that can only add to their bottom line. So yeah, good call. Like that one.
One other bit of news, guys, that's happened since we were last recording, since we were last on air, was the offer for Gresham House, which I think was announced last week, which we probably should have a mention, because
go for it.
Gresham House is a big investor in small caps and micro caps. Very good fund manager Ken Wotton, who I think we've all met or talked about. But more generally, this is another example of a UK PLC getting taken out on a fairly punchy premium. I want to say the premium was 60% over the previous closing share price. That rings a bell. And the acquirer is Searchlight Capital, which is a big PE fund, in this case based in London. So I think it's a recommended offer. I think it's a big premium. And it just sort of illustrates once again that there are people out there who are willing to pay decent prices for unloved UK assets. And in the case of Gresham, I think they're one of the most interesting alternative asset managers out there. So it's a shame to see them delist, but it does highlight that the UK market is inexpensive. And Searchlight will build on Gresham. So that happened, I think that happened last week. I'm pretty sure it happened last week. So probably worth flagging that, because let's be honest, I think M&A is going to remain a theme of our UK market.
Absolutely. That was the 17th of July, £470 million bid. And it was a 63% premium, 10% above their all-time high price. So I think that took the markets by a significant surprise, really. So what was that then? 17th? Did it last Friday? Week ago on Friday? Is that about right? 17th-ish. So yeah, and the share price rocketed. 11.05. It was the price they put it out for it, and absolutely flew. So substantial premium. And again, I keep saying to people, there'll be more and more takeovers. If we can get more takeovers and less profit warnings, we'll be very, very happy with that. I think the thing for me is that there's lots of other asset management companies, wealth management companies, that are sitting nearer to 52-week lows. I suspect going forward, and I do hold a few, so maybe I'm biased here. I do suspect that in the next 12 months, we'll be seeing more and more consolidation regarding alternative asset management companies, wealth management companies. And also, I'm sure you guys have seen it as well, the smaller end of the investment trusts are also consolidating as well. So we're going to see more and more of that going forward. I know my good friend Annabelle Brodie-Smith at the AIC will not be impressed by me saying that, but I suspect it's going to happen because some of them are just too small, and they're going to consolidate going forward. So yeah, we're going to see that. And unfortunately, if they don't merge with like for like, we're going to, like you say, they are going to delist, aren't they? Or they're going to be taken over by a private equity company, which we're not going to get any sign or sight of, because they're overseas mainly. We can see some of them being taken out by other entities that are listed in the UK. That benefits everybody, really, I think. But I don't know where the deep-pocketed people of the UK have gone to.
Pete and Henry, thinking back, 6-9 months to the Investec Rathbones deal, which was announced. I mean, it wasn't really about additional revenue growth. It was really about economies of scale, cost savings, consolidating the back office.
You only need one set of compliance, one set of IT.
Absolutely. And that won't necessarily be the case with Gresham, because Searchlight is a financial buyer, not an asset manager. But yeah, in an economy where there isn't a lot of growth, you've got to look to generate your own growth. How do you do that? It's generally through deals. And I think you're right. If you've got a subscale asset manager or a subscale investment trust, that board is going to be asking itself, okay, guys, what do we do? What's our strategy here? Who out there is on a lower rating than us? Who out there can we pick off? Would they be up for an approach? I think those chats will be going on in boardrooms right now.
Absolutely agree. More mergers and consolidations, most definitely. And I think the investment trusts are going to see a lot. I think the renewable space as well, which has been hammered over the past year because interest rates have been going up. I can see some consolidation in that space as well. But I suspect we're going to see a lot more of the US, even Canadian private equity entities coming plundering again, because we've got, like you say, we're sitting at a discount still, so unfortunately more and more takeovers to come. Henry, you're looking a little bit like, mate, what have you been impacted? We need to talk about it, Henry. We both hold S4 Capital, right? And as always, I know you didn't want me to mention it, but I'm going to mention it because I have to be transparent, right? We were here this time last July. I was there, chilling out, having a lovely holiday, and I got absolutely pied, got smashed across the chin, huge profit warning from S4. And I did my checks, did my little review, and I went to the beach and just chilled out. And I thought, yeah, fine, it happens. That's part and parcel of it. 1 year on, just come back from holiday, I get pied again. And I look at the macro situation, look at the advertising space, and I'm going, I've given it enough. I took an absolute smashing on it, got absolutely mullered, took the hit, and I've moved on. And I wish everybody that's holding S4 Capital going forward good luck, but I've moved on. Took the loss, as is part and parcel of the rites of passage of investing. Sometimes you win, sometimes you lose, and more often than not, you'll always get a lesson. I've had a lesson. What are your thoughts on it?
I'm still learning. I'm still in there. I'm still holding, and
Michelangelo says he's still learning, mate. 87 years of age, so absolutely, we're all learning.
Judging by the tumbleweed on Twitter, I think I'm the last person holding. I think I may be the majority shareholder.
This is a quick hello to you, our valued Twin Peaks Investing podcast listener. Whatever channel you're listening to, please make sure to subscribe, and you'll always be the first to get the new episodes. Thank you for your continued support.
I think you could be right, and the same was always also the case when Portmeirion did a profit warning a week or so or two ago. Tumbleweed, no one owns it. I was like, oh, okay, fine.
The interesting thing for me with S4 Capital, and bear in mind I hold this, but my gut feeling with this is that Sir Martin Sorrell has gone in swinging, buy this, buy that, buy the revenue, basically, and we'll worry about the costs later. He's managed to get to the £1 billion revenue mark without paying any attention to costs whatsoever. And his accounting team have all been running around in the background going, you've got to stop buying things because we can't keep up with the accounting. We had the accounting shock last year. And he thought, well, okay, we've got that a little bit wrong. Brought in some extra people to sort out the accounting. They seem to have that sort of under control now. We've not had any more clangers announced. But that's just telling you what's already happened. You're just painting an accurately bad picture. The figures still look dire. They're loss-making. There's adjustments all over the place. And I'm not really hearing anything from him on how he is going to turn the loss into a profit. Because at some point as a shareholder, you've either got to stop taking on debt or I've got to stop subsidizing you with more equity. So for me, I'm not going to sell into a profit warning because the damage is already being done. If I was going to sell, I'm down about 74%. If I was going to sell at 74%, I might as well have sold at 54% down or 34% down. So for me, I'm looking for a little bit of positive news coming out of this before I make a decision one way or the other. Now, if we get 12 months down the line, and I am willing to sit and wait another 12 months on this, it's now the smallest position in my portfolio. But if we get another 12 months down the line, and this is still, don't worry, everything will be okay, but we're still making massive losses, I will be saying sayonara to it as well. Because you cannot continue running a business that is loss-making ad infinitum. At some point, someone like WPP will turn up, and if there's value there, they'll take it out at, the £1 a share that it is. They're not going to be paying £8 or £9 a share because they don't need to. And Absolutely. So, as a shareholder, you have to be a little bit sanguine about this and really acknowledge the fact that at the moment, this is not a great company to own. And it's certainly not one that I'd want to be loading up the wheelbarrow with.
Yeah, very, very good points, mate. And I wish you well and everybody else in it well. I've taken my hit. There used to be whoppers of revenue, and I got a whopper on the chin. So I'm moving on, dazed and confused. Now, it's a really important point you made there about the share price moving around. There's always a temptation when you've got a small sort of shareholding to go, you know what, it's only a small shareholding. It's come down, so I'm going to keep it. And you know what? I'm going to wait and see if there's some positive news, and I'm going to add to it. And therefore, when it starts to accelerate and re-rating, you're then actually quicker to break even, and also you're quicker to making a profit and a return. But if you've got a large holding that's become a small holding, and you then compound that loss, you could really, really compound the loss some more by adding at this new 52-week low sort of area. But I want to make a caveat to this, and this is about finding the best companies in the world. And it's rare that we can find them at the very, very outset. And I fully appreciate that. But I saw this tweet, which was out yesterday, and I've got to share this tweet with you. Now, this is about Apple, and we've all seen the numbers regarding Apple, and it's ridiculous what's happened with it. But this is about drawdowns and how the share has accelerated. Bit of a history lesson here now. Apple IPO'd, I'm going to have to look at my notes, I can't remember it all. IPO'd 12th of December 1980 at £22 per share. There's been 5 stock splits apparently since that IPO. So the split adjusted price, go and check out what that is. It's probably about 10 cents. Okay. If you invested $1,000 in Apple when it went public in December the 12th, 1980, as of yesterday's date or the day before last, you'd be looking at £1.3 million regarding that £1,000 investment. However, lots of people on Twitter, including myself, talk about buy and hold here, right? And how that makes you a serious investor and how that's how you make the most money, etc., blah, blah, blah. During that time from 1980, right, December the 12th, you've had 15 sell-offs where the price has dropped 20% or more. You've had 5 sell-offs of 50%. You've had 2 drops of 80%, right? Bearing in mind in 1980, 1981, 1991, no one knew the phenomenon that Apple would be. How many people would have held on for an 80% drawdown of that behemoth company or that company they think that's going to become something and become 80% drawdown? I'm not sure. Right now, bear in mind, I can't think, my brain's gone blank now. The co-founder or one of the co-founders of Apple sold his his stake in the company for $800, if I remember rightly. Remember his name? What's his name again? I can't remember his name. Anyway, sold his stake. That stake would now be worth probably trillions, right? So
It goes to
what's
show,
the lesson
and
here?
that's
Buy and hold, yes. Average down, yes. But choose your company very, 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 very carefully. Yeah.
yeah.
They both
The
look
odds of
stunned and
you
quiet.
having that Apple, you know, of having Apple in your portfolio unknowingly. I mean, how many listings are there in the world, guys? Thousands, tens of thousands.
There's thousands. And what's
So
the
the odds
adage
of
that the
that
best
are
invest
one in a few, 1 in 40,000, let's say. I don't like those odds.
absolutely. What's the adage about the best investors being dead? That person that bought it and then no one knows where the certificate is,
Oh
and
yeah,
has
yeah.
already popped it after 42 years. What some sibling's gonna, Alex the group's gonna find some certificates and go, oh my gosh! In the attic he goes and he finds some certificates. So me and you will find it in the. Well, there you go. Anyway, I just thought I'd just share that. I just think it's very, very impressive, but you've got to be very, very mindful that it's a rare occurrence. There's going to be an IPO if we get some IPOs in the UK. Will we find a stock that absolutely soars over the next 42 years? Alex and I may not be around, but you will be, Henry. So can always keep looking, mate. Always keep looking.
You can come back and ask me.
Absolutely, absolutely. Now, Alex, have you got a second stock you want to share with us, sir?
I got a second stock. I think, I mean, it's simply boring talk about things like Games Workshop, which continue to deliver and perform and pay dividends and perform strategically. Sort of feel as though it may be a bit over-owned, though, quite frankly. A very good company, but maybe slightly over-owned. So what would I look towards at the moment? I don't want to name one, but I definitely think you're onto something, Pete, with those investment trusts. But I don't want to name a specific one. I think that would be a bit unfair. But the general point, what I have been looking at, and I've posted on this, is that the discounts on investment trusts are at multi-year highs, or share prices are at multi-year lows. So I like investment trusts, and I appreciate they may not always be that well understood or that well explained. But one of the things we do quite well in the UK is investment trusts. You mentioned Annabelle. So I would nudge or encourage people to do a little bit of work on investment trusts.
There is
an asset class they are trading on just to finish off, Henry, as an asset class, they are trading on significant discounts to NAV, net asset value, often while still paying fairly meaty dividends. So I won't name one on this pod, but that's the theme I'm looking into with a view to making a couple of new investments. Because I do think, back to your earlier point, Pete, there will be pressure on boards to look to deliver value if the market price remains subdued. So more of an asset class answer to your question rather than a stock answer to your question.
That's fine.
But, that's what I'm looking into.
Cool. Thank you for that. Henry, what is it you wanted to share regarding what Alex was saying?
Yeah, no, I was just going to say that there is a very good book on investment trusts, the Investment Trusts Handbook, which you can pick up. I can't remember who on earth the author is now. I've got a copy in the other room.
I think it's Rebecca O'Connor.
Might be. But
it's one of our prize books, mate, that someone could have if they win the monthly thing. And they'll get it within their batch of 15 as well.
But it's not one I buy every year, and I've not got a huge amount of investment trust, but I picked up a copy at the Master Investors Show. And honestly, I really enjoyed it as a read. Lots of good interviews with investment trust managers. There's lots of data in the back. There's a description of how they work and how they're funded. If you're looking for an introduction, you could do a lot worse than that book.
Cool. No, I completely agree with you regarding that space. I'm going to share a company with you, which I know that Henry's going to give me a pop on because it's got a significant amount of debt. But it's one of those sort of stocks that's sitting in the FTSE, right? FTSE 100, and everyone loves to hate the stock, and I tend to like stocks that no one else is interested, no one is talking about, and it always I'm always going, why does no one talk about that? Is it because of what the company does, or is it because it's got a legacy of issues that's hurt people in a sense of, punished them as shareholders, and it's now coming good, and people are going still wounded by what happened 5 years ago regarding it, and going, no, I'm not going back there again, because the minute I buy it, share price will fall again, sort of thing. You know how we've got that, reflex and memory regarding the stocks that hurt us. The stock's name, right, is one that everyone knows and probably had dealings with invariably via the corporations that they've worked for, and it's Rentokil.
Yeah.
Right? Market cap £4.1 billion. A PE, whew, rich for a little stodgy pest controlling company. 55 PE. Henry's going, whoo, yield of 1.17. Yeah, the shares are up 27% in 12 months. Year to date, up more than 25% in the space of 6 months, right? A lot of this accelerated growth is after they made a huge purchase back in early 2022 of Terminix from the US. So they're getting a lot of revenue from the US because of this massive acquisition that they made. And that's where a lot of the debt is sitting on the balance sheet. So they purchased that for 6.7 billion. Bearing in mind, the market cap's currently 4.1 billion pounds. That's 6.7 billion dollars of acquisition is what's, most of that's still sitting on the balance sheet. But they came out with a trading update in April, and trading in the year has started well, with reported revenue up 64.5%. That reflects the benefit of the M&A, including Terminix and other little bolt-ons that they've done. Organic revenue was up 6.7%. And obviously, they're all over all this stuff going on all around the world, cleaning up, dealing with various different stuff. And the beauty of it is that they're getting a chunk of revenue from North America, Latin America, Asia, and the rest of the world. So it's a very global business, and it gives you that revenue stream where one market might start to flux, another one's doing really, really well, and it just keeps them going. But behemoth acquisition in 2022, and it seems to be helping them at the moment. Debt's massive.
Was the Terminix deal last year, was it? The Terminix deal you're talking about?
They started it in the beginning December 2021, concluded it around March, April 2022.
And in the commentary or in the updates, so they're generally quite upbeat about how that's performing.
Yeah, yes, they are. Yeah, outlook. Yeah. We remain cautiously confident that progress will continue in the second half of 2023. Continue to invest in our business and to further strengthen the balance sheet through retained profits.
Yeah, because I would have thought having access to the US market is almost the holy grail for a company like Rentokil, which I think we think of as being quite European or quite UK. If Terminix gives them another leg of growth, that's got to be a good thing, hasn't it?
Sorry, apologies. I've read that outlook from another company I'm speaking about in a minute. Apologies. Okay. I've not got the outlook on Rentokil from that trading update that I pulled off. Apologies.
Okay. Well, we can do our homework on that afterwards, but Terminix sounds to me like a very sensible strategic deal, and it sounds as though it's performed quite well since acquisition. I do make. Go on, sorry, Henry.
I was going to say, my only query about it, massive revenue, right? Debt, not necessarily a problem if you fix it and if you can service it. Very high quality business. And I'm not saying I could necessarily do this, but how difficult is it to catch and kill a rat? Their services
they do far more. Don't be so cheeky, Henry. They do far more than that, and you know it.
They are, Henry. They're developing an algorithm which will kill a rat remotely.
Oh, we've got Terminator rat catchers.
Oh dear.
I'm being a little bit flippant there, but you know what I mean. On the flip side of that, it is also kind of a serious product. If you've got a rat infestation, you'll do anything to get rid of it. If you came home and your wife said, we're inundated with cockroaches, do something, you'll just pick up the phone and, Rentokil, get round here now. So,
Henry, their main competitor is a US listed company called Rollins, right? Ticker symbol ROL. Have a look at them and compare and contrast as to the size that they're on. market cap wise, PE, debt wise, etc., etc. That'll be a good way to have a look at the two global peers that are out there. But yeah, interest. I just thought, just share it. I don't own it, as per usual. I don't own it, but it's an interesting company for a 4 billion market cap that no one really talks about. I just thought I would share that with you. The other one I want to share with you today is a tiny little tiddler by the name of RTC Group. Yeah, and it is a recruitment business. And I'm not sure if everyone follows me on Twitter that listens to the podcast, but I'll say on a daily basis, Monday to Friday, I put out a bullish RNS tweet. So what I'm doing is quickly scanning through. I won't get them all right. Quickly scanning through regarding the RNSs in the morning, and I put 6 to say half a dozen tickers out that I think I've quickly scanned these, and I believe that they are bullish. So give people that are not that great at reading RNSs an indication as to what positive news that's out there. And today I put that out as a tweet regarding lots of other tweets regarding the RNS. And why did I put that out today? Basically, they came out with some interim data, and the group revenues had increased 33%. Contract revenues were up significantly. Profits went from minus 0.4 million, it's a small company, to 1 billion. So an increase of 1.4 billion over the period. And then their net assets grew as well. No debt, right? And then lo and behold, this tiny little tiddler company says the directors propose an interim dividend of 1 pence per share. What happened to these stocks this morning? Today, sorry. The share price rose 119% today.
Right.
Yeah. The market cap currently is 2.6 million or something daft like that. It's really, really, really small as a tiny little recruitment company. But the share price absolutely went off. So there's opportunities in the large caps. There's opportunities in the tiddlers, but you have to be very, 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 very careful. Am I recommending that stock as a stock to buy now? It's gone up 190%. Absolutely not. Could it go higher? Of course it could. I'm just telling you about it, and also asking you to bear in mind, read these RNSs, look for the nuance. You've got a tiny little company paying a dividend of 1 pence. The share price is only 10 pence. Whoa, what's going on there? Maybe that's of interest. Yeah, you've got a company with a market cap of 1.5 billion saying that it's just generated profits of 1 million. That anomaly, share price takes off. Yeah. If you've got Shell and Shell rocks up and says it's got £100 billion of profits and its market cap's 116 billion, maybe you want to buy Shell. Yeah. But it's not going to go up 119% in a day. The tiddler will move far quicker than the mammoth or the whale. Henry, have you got a second stock, my friend?
I have got I've got 2 US ones, so hold on to your hats. We've got one I think you're going to like, Peter, actually. In fact, I hope Alex will like it as well. You will definitely have heard of it.
Let me interrupt you there, right? I have purchased a recent behemoth stock in the US. I've not mentioned it to a soul, right?
Oh.
If you do a wheelie on this show, you're off, my friend.
Oh, can I sink your battleship?
Be warned. Right. Be warned.
The company is Accenture.
Whether you are an experienced or new investor, you know how valuable it is to conduct portfolio enhancing analysis and to have easy access to data that will give you the edge. As a Twin Peaks investing podcast listener, you can access an exceptional offer via SharePad from ShareScope, the UK's #1 investment data and analysis software for private investors and traders. This special Twin Peaks offer is available to new subscribers only, and you can subscribe using the promo code TWINPETES. The incredible and exclusive offer means that monthly subscribers will get their second month free, and annual subscribers will get their 13th month free. Sign up and subscribe to SharePad today using the Twin Petes promo code, and you can save up to £69. Visit sharescope.co.uk/SharePad for further details and subscribe to the investing and trading analysis and data you need.
Oh,
No.
it's paused. No, I'm safe. Right, ladies and gents, you've got me for another episode after this. So, for those of you that don't know, Accenture is a global professional services company. They provide a very wide range of services in the technology space in 3 different main geographies. They've got North America, they've got Europe, and they've got what they describe as growth markets. So that's Asia Pacific, Latin America, Africa, and I think the Middle East they've thrown in there as well. Now, the company is essentially helping their clients to leverage innovative technologies. Now, the clients can be all types of businesses. They tend to be big, well-established blue chip companies, but they can also place smaller, further down the cap scale. And the innovative technologies that they help clients with range from things like our favorite buzzword of the day, artificial intelligence, robotics for industrial automation, all the way up to quantum computing technologies, which some of you may be aware of. This is very high-powered, high-scale, high-speed computing systems that are used to process hugely complex mathematical issues far quicker than traditional technologies. And effectively, they're bringing these technologies into clients to help companies explore new ways of doing what they already do, to do them quicker, to do them cheaper, to do them better, but also to deliver solutions that aren't currently possible. If you don't have a quantum computer, you can't do what you could if you'd got one. It's a £160 billion market cap company, and they've managed to grow their earnings per share every year for the last 6 years. And that's forecast to grow all the way through 2024. Even with the economic headwinds we're facing and the nerves about the global economy slowing down, this company is still forecast to do very, very well. It's only got a small 1% dividend, but they're also buying back shares at a rate of about 1% a year. So you'd get a return of, sort of 2%-ish, give or take. It's not necessarily one that I would buy at this price, but it's a company that's in an interesting space and doing a lot of very interesting things. So it's one that listeners might want to go away and do a bit of research on and maybe add to their watch list.
Okie dokie. A couple of questions, Henry. Great spot. Ticker symbol. How much is it up year to date? If you've got that data there, please, so we know how well it's done already, please.
The ticker symbol, it's on the US markets as ACN, I believe.
Right.
And let's have a look what it's done year to date, because I didn't pull that figure. Bear with me.
Thank you.
Year to date, it's gone from about 270 up to about 315. So what's that?
Okay. Yeah.
It's on an upward trend for sure.
So 45, so just under probably about 20% ish. Less than 50, less than 20%. That's not too bad.
About right. It's even up over 3 years. I mean, 3 years ago it was down at $235. So it's got some strength in it. It came off the boil a little bit. The recent high was in January 2022. Yeah, January 2022, when it went all the way up to nearly $400 a share. So it's definitely come down off the boil a little bit.
Brilliant. No, good spot again. And I think it's very important. I've been speaking to a lot of fund managers, and there's a recurring issue as UK investors in that we're very UK centric, and the profits and the larger sort of outperformance over the past, I don't know, Alex, maybe you'll tell us, 10, 15 years has been achieved by those more global investors, especially those that have invested via the S&P 500, the Dow, or more so the Nasdaq. And we've been oh, we need to invest in the UK. We need to invest in UK small caps. Yes, we do. But, I think it's important to diversify our portfolios a bit. And I'm trying to do that a bit more. I had no intentions at the start of the year to be buying, a 50 million sort of market cap sort of US company. But that's what I find myself doing, because I'm trying to find the best quality, taking a leaf out of Algie Hall's book, that I can find elsewhere if that's the case. And already it's up nearly 10% in the space of a very short space of time since buying it. Similar sort of company in the UK, they're not going anywhere. So why not?
Yeah,
Good
I think
call.
the thing is, guys, it's this concept of home bias, and home bias is quite, it's quite a sort of bit of a cliche, but it basically refers to the fact that we tend to favour our home market, which is totally logical. We know the companies, we know the market, it's how we feel comfortable. It's on AIM or it's in the FTSE 250. But the reality is that actually, if you only look at the UK market, you're cutting off your nose to spite your face, because for global investors, the UK is only 4% of the global stock market. So it's interesting, it's important, but it's pretty bloody small. So look at the US, because it's 70% of the world stock market, 70. And what's more, it innovates like anything. And talking about Apple, I mean, how many innovations has Apple been through in its business journey to date? So yeah, look overseas. Accenture is a really interesting company in many ways. And one of the things that I've sort of observed over the last few years professionally is just how good consultants are at getting themselves paid. And even through this sort of inflationary spiral that we're in, they are pretty good at getting themselves paid. So, don't worry about Accenture's business model. That'll be rock solid. And increasingly, clients will pare back what they do and they will outsource to a third party. And one of the blue chip third parties is Accenture. So I think I'm with Henry on that one. But just in general, outsourcing is a trend to be on the right side of. I don't see that changing. So yeah, I mean, look at the US. It's massive. Don't ignore it. It's where all the innovation is, and stay on the right side of consultants. Absolutely.
Yeah, I think Henry's got a lot of experience of dealing with consultants, but he may not want to share some of that information on here. So you can take the fifth if you want, Henry. Have you got a second stock you want to share before I go into a few bits and pieces?
I've got another very exciting US stock, which
Go for it.
some listeners may have
You can
heard
be our
of.
US correspondent going forward, Henry. I think we should give you that
if you want
title.
to fly me out there, I'm happy to.
Would you be happy to be based in Washington?
I'll go for it.
Okay.
Oh, I don't think your good wife would be happy with that statement, mate. And she knows she listens now. Oh, okay.
Part of the package deal. No, this is a company called Gingko Bioworks. Ticker is DNA. And it's a £3.7 billion market cap, delivering what they describe as bioengineering. Now, for those biology students in the audience, you'll be aware that nature presents some pretty astounding properties. We've got organisms running around on the planet that can self-assemble, they can self-repair damaged tissue, they can self-replicate, they can change color, they can do all kinds of things. And that's before you've even started looking at the potential of the human body and us as sentient organisms. Now, perhaps the most astonishing feature of biology is the fact that it all runs on this thing called DNA, which is sort of the digital code of an organism. And DNA stands for, let me get this right, a deoxyribonucleic acid. If there's any biologists out there, please don't correct me. But effectively, this DNA is the building blocks of life. It's a set of pre-programmed instructions that tell cells how to operate. And Gingko Bioworks is building a set of tools to enable organizations to reprogram and utilize the code in DNA to achieve different outcomes. They've recently been awarded a 4-year contract from the US government's DARPA organization, which I think is the Defense Advanced Research Projects Agency, to manufacture therapeutic proteins. And they're essentially hoping to bring cell-based therapies into traditional pharmaceutical processes with that platform. They've also, another interesting use case they've got, they've partnered with a company called Synlogic to program probiotic bacteria to treat complex diseases. And for those of you on the call that were invested in 4D pharmaceuticals, that is a very similar technology. Peter's got
Don't mention
very
4D,
funny
mate. That's taboo. You can't make. Everybody lost money on that. Don't mention 4D. Come on.
Yes, please send your hate mail elsewhere. But
Mate,
if you genuinely
listen, I've not heard of Gingko Bioworks, mate. DNA. I've never heard of it. Great find once again. What is it? 4.6 billion-ish. Never heard of it. This is what I'm saying about home bias. That sort of market cap, we should all be aware of it, should we not?
Yeah.
You know, but we don't. I don't. I certainly don't. Great find again, Henry. I like the fact that you're going out there and just being completely independent and just going out and just finding doing a random walk, as they say, and finding these very, very interesting companies for people to go and investigate. Very, very well done, mate. Love that. Love that. Really, really do. Good call.
Thank you.
And you had to go and ruin it though and mention, oh, it's a little bit like 4D. No, it's not. Don't
Hey,
say
if you
that.
like the science, go have a look, guys. I'm an unbiased observer.
You are. Any thoughts there, Alex, regarding that? Have you heard of it, by the way?
Do you know what? I've not. I mean, the funny thing is that a $4 billion company in the US, I mean, that would be in the FTSE if it was over here, but in the US, it's just a small cap or a mid cap. So size.
It's an AIM stock.
It's
an AIM stock, mate.
It's an AIM stock. So I could not possibly offer any value added on that. But on the back of Henry's recommendation, I will do some DD. So that's probably the best I can offer on that.
No worries, no worries. Right, I'm conscious that of the time we've had on here, I'm trying to be good this week and not waffle on too much. I'm going to do a quick little shout regarding all of you lovely people from all over the place. I've been asked to make a comment regarding a couple of people that have said something to me in the past couple of weeks, and I won't name names, but our current listenership, I will say listenership, is in countless countries. I need to do a shout out for those that are in the Ukraine listening to this podcast, Greece because of what's just happened regarding the wildfires. Also, we've got lots of issues going on previously, and I should have done this at the time regarding our listeners in Turkey, which had the earthquake, and all the stuff that's going on elsewhere. So just thank you ever so much for keeping in touch with us all, and thank you for listening. And this takes me on to my other point. No matter where you are in the world, I've had some messages from our good friend Go Left Massa and a chap that Henry and I know called Jared Maloney, and they've reached out and said, Pete, what's going on? These podcasts are actually going to go behind the paywall. I started doing podcasts back in 2015-16. I did the Conquest Corners one first. I funded them myself. And when I started this particular podcast, I funded them myself for a couple of years. We're looking to get a sponsorship deal with ShareScope. Fantastic award-winning software. Got no intentions of taking this behind a paywall, because for me, it's about paying it forward, and it's about enabling people to learn from my mistakes, and from Alex's expertise, having worked in the city. And, you know, you've got Henry Viola Hare now, you know, just trying to keep evolving. And we're learning from these sort of people who are experts. And we've got sitting on the bench waiting to come back when he's well. We've got Wheelie Dealer coming back, you know, probably in September. So we're going to have four of us sharing, giving, paying it forward to numerous people all around the world. Do we ask you to pay for it? No. All we ask you to do is just give us some feedback, subscribe on the platform, and if you can and you can afford it, and you want to want to give us some money, don't give it to us. Give it to the charities that we're supporting, and you can do so at www.justgiving.com/fundraising at the Twin Peaks Challenge 2-3. We're sitting at £2,000 right now. That's going to help disabled children. If you want to add to that balance, please donate a £5, £2, whatever you can afford. But we won't be asking anyone to pay for this podcast going forward. That's just the way that I am. And that's the way that Henry is. And that's the way that Wheelie is. And that's the way that Alex is. So That's all I want to say on this front. If you're on listening to the podcast in wherever you are, and you've got YouTube, and you've got Apple, and you've got Spotify, just subscribe if you can. Keep supporting us. We'll do our best to support you. That's all I've got this week. Alex, what you got?
Oh gosh. I mean, can I just touch on something on a non-investing front, just very, very briefly? Can I just say how sad I was to see in the last 48 hours both Trevor Francis and Chris Bart-Williams pass of
Yes.
Forest and Sheffield Wednesday, both taken well before their time. Both brilliant footballers, and both, of course, played for Forest and Sheffield Wednesday, and Francis played for England many times. So that sort of touched me, because I like both of them as players in the early 90s. And it's just another reminder, isn't it, that we're not here for that long, really. And we've just got to make the most of it and be nice and improve. And, God bless Trevor Francis and Chris Bart-Williams and their families and friends. Non-investing, but big sports stars. And certainly when I was a kid, Francis was a big name, and he'll be sadly missed.
I absolutely agree. This is the thing about being kind, because we do not know how long we've got, and always give out kindness. Don't just talk about giving out kindness, do it. Your action speaks far more than your words, and that's what we're trying to do here. And it's not just talk, you have to put it in practice. And that's why I do what I do in the communities, wherever I am, all of the time. And I'll continue to do it. And this is part of me with you two and Wheelie trying to build a community of other like-minded people that are kind. And we'll carry on doing that. Henry, last words, please. No, don't say 4D.
No 4D.
3D or 5D.
3D, yeah. Well, everyone's talking about Barbie. That was going to be another
2D.
stock I'm talking about. I'll talk about it next time. I've got a stock that I want to share with you guys related to cinema.
I just wanted to say again, thank you very much to everybody that's reached out. I've had some really nice messages from people, and just touching briefly on Peter's comment about the free content thing. I've written a blog for many years for free. I'm not going to be changing that. There are paid models out there, there are free models out there, but at the end of the day, I started writing my blog a long time ago to meet people that like investing, that want to talk about investing, and I want to open that up to as many people as possible. So don't be shy about coming forward. I love chatting to people. I love talking to people about investing, about how you're finding it, the challenges, the highs, the lows, the whole thing, your whole journey. And the best way to do that is just to put yourself out there like this and say hello to people. So thank you to everybody that's tuned in, and thank you to everybody that comments back, because honestly, it's a lovely feeling to know we've got so many great listeners.
Brilliant. Love that, Henry. And it's deserved as well. We've had great feedback for Alex as well. So I want to thank everybody that keeps giving us the feedback and keeps on listening. We're sitting here now with 3,000 listeners. We're nudging good numbers as well on YouTube. If you haven't done so, please subscribe on YouTube. We'll get to 1,000 hopefully by Christmas. But it's about building that community, and that 3,000 number for me is significant, because we're working up those numbers, and we're competing against behemoths that have got a mailing list of 80,000 people or 100,000 people. We're not utilizing a mailing list, and we're doing it without that. So we're doing all right. Guys, ladies and gents, thank you ever so much. Wherever you are in the world, look after yourselves. Be safe, be kind. We've had the issues in Greece, and we saw what level of kindness people can do. We just rescued people, got people on little boats. We can't talk about little boats in the UK because it means something different. And people were moved to safety with their children, their family, and got fed and watered. And hopefully they'll be safe when they come back and go wherever else they need to go in the world. But show kindness, enjoy the summer while you can. And as Alex touched on, this is not a dress rehearsal, folks. You've got one shot at this. Look after yourselves, enjoy, and be kind to each other. That's it. We've got a wrap. End of 106. Take care. God bless you all. Bye-bye.
This Twin Peaks Investing podcast is brought to you in association with SharePad from ShareScope, the UK's #1 investment data and analysis software for private investors and traders. Visit sharescope.co.uk and discover the advantage.